Bitcoin tumbling. This is all about Bitcoin, a show dedicated to all questions markets related to Bitcoin, little b for the currency, and big B for the network, a collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Ling. Let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XBX index at $30,913. Bitcoin is crashing over 10% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data. The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app. Bitcoin tumbling to its lowest price since July of 2021 as market panic grows. The reality of tighter monetary policy continues to be felt in risk assets. The US dollar is trading higher as macro headwinds weigh over stocks, bonds, and Bitcoin. Liquidations on CryptoTrack futures exceed $411 million in the past 24 hours, data showing that some $140 million arose from Bitcoin futures. Popular indicators suggesting institutions are selling Bitcoin into a falling market. The Coinbase Premium Index, an indicator showing the spread between Coinbase's BTC US dollar pair and Binance's BTC Tether pair, are recently turning negative and fell to a 12-month low, according to data tracked by South Korean-based CryptoQuant. UK-based crypto broker Global Block saying that a greater percentage of institutions use Coinbase compared to retail, whereas the opposite is the case for Binance. Therefore, the price mismatch suggests institutions are not currently as interested as retail. This will be good to keep an eye on going forward, and if when this reverses, it could coincide with some relief in the market or a reversal. Taking a look at some of our top stories, UST stablecoin falling below its US dollar peg right now at 94 cents. Earlier it was at 92 cents. This is happening for a second time in 48 hours. The development comes after the Luna Foundation Guard announced that its massive Bitcoin reserves will be used to defend UST's dollar peg. Joining us now to discuss BTC price and more is Don Kaufman, co-founder of trading educator TheoTrade. Welcome, Don.
Thanks for having me on.
All right, so taking a look at the markets, from seeing a lot of red, what's your outlook on Bitcoin?
Well, there's some good, some not so good in this particular case. A lot of what I look at happens to be correlations between S&P 500, NASDAQ, some of the original meme stocks, if you will, and of course, many of the crypto assets, specifically Bitcoin in this particular case. And as I said, some good, some not so good. One of the things I'm looking for right now is higher degrees of capitulation. As you know, I've been on here time and again and been rather bearish. And we really, right at this point, are looking to kind of reassess our stance in Bitcoin, specifically right around the 30,000 level.
So what is the strategy? Do you see it going lower, or, you know, in which case maybe not is now a good time to buy, or now is the buying opportunity, it's at the low?
So, you know, I'm going to look at this a little bit more as a trader than an investor. If we're an investor and we're looking like, hey, is this a great time to enter into a Bitcoin position and something I'm going to hold for the longer term? I'm going to say absolutely not. I think that the volatility is through the roof at this point in time. We have some signs of capitulation on the screen right now, but this has not been a complete and utter, you know, blowout of a sale just yet. And it's one of the things that is a little bit disconcerting moving forward is, as I said, I'd really like to see some things on my screen right now that just scream capitulation, you know, traders dropping out. A few of the factors are there, but unfortunately a few are presently not.
All right. I want to turn to UST as well, the Terra Luna ecosystem, their algorithmic stablecoin, Terra USD. So that has fallen off its peg. Earlier it was at 92 cents. We showed on the screen just now, it's recovered to about 94 cents. It's supposed to be one-to-one to the US dollar. It has an $18 billion market cap. So one of the founders of the Luna Foundation Guard, Do Kwon, was tweeting earlier that they're deploying more capital, steady lat. So it appears that it seems to be working. I mean, they managed to go from 92 cents to 94 cents. Now, the LFG, the Luna Foundation Guard, has about 2.6 billion in BTC reserves to make sure that their stablecoin stays stable according to its peg. So it's the second largest corporate holder between MicroStrategy and Tesla. So I just wanted to hear your thoughts. Could this have an impact on Bitcoin?
Absolutely, unequivocally. I think it's much more of a sign, though, of some of the extreme stress inside of the crypto markets as a whole. To give you a feel, again, stablecoins are literally being ripped apart. There's actually arbitrage opportunities that are available, and yet we're still seeing, in effect, the stablecoin, destabilize at this point in time. It's not something as a trader nor an investor that's going to make me feel ultimately warm and fuzzy, but this has a lot to do with a massive unwind, and again, a lot of the crypto assets. But we're actually seeing, again, as I said, areas and degrees of capitulation. However, stable coins starting to actually come off their mark. There's nothing more disconcerting inside of the crypto marketplace at this point in time. However, on the flip side of that, maybe it's a sign of capitulation. Again, we haven't really seen this kind of activity in years inside of this marketplace. Anytime you see, an inordinate volatility, again, some huge fissures will open up in the marketplace, provide a couple of opportunities. And I think, again, a more avid trader would look at this as opportunistic and possibly take advantage of it. As an investor, though, this is where you take a couple of steps back. It's actually a little reminiscent, if you will, of some of the money market issues that happened all the way back in the financial crisis.
Interesting. Well, the Luna Foundation Guard has said that they'll be lending out $1.5 billion, half in Bitcoin, half in Terra USD. They're supposed to burn Luna to maintain their peg. So what do you make of this shift, would you say, to a Bitcoin-backed model? Do you think it'll work?
Well, I think ultimately it will work. However, the very fact that they're having to actually step in and, if you will, manipulate the product, again, is not exactly enlightening to me as a trader. Nevertheless, as I said, I think that it could be a little bit opportunistic for those that are willing to actually go in and take that risk. There's arbitrage opportunities in here. What, again, though, on the flip side is alarming is that a lot of traders are not necessarily coming in and going for that arbitrage opportunity, which tells you that there could absolutely be more downside risk, if you will, in the very near term of some of those stable coins.
I wanted to play a clip from this morning. We interviewed Swan Bitcoin CEO Corey Clipson. Let's have a listen.
I think this is more just, check yourself before you get on board with supposedly bullish narratives. I think it's really important to have a critical eye and not cheerlead things just because somebody says they like Bitcoin and the narrative seems mildly bullish. I think this is probably the worst false narrative that we've seen in the Bitcoin space since the fake S2F models, which are obviously really embarrassing for Bitcoiners to try to be pushing to anybody that understood stats and math and finance. We kind of got laughed out of the room with the S2F models. And I think something like this is, equally just getting egg on the face of Bitcoiners that have been cheering on a total Ponzi scheme and a scammer.
So Don, ultimately, Corey doesn't think that Bitcoin will be impacted in the long run. But if we do see this shift, this lending from the LFG to over-the-counter desks, and they end up selling Bitcoin, could it end up impacting Bitcoin in the long run?
Yeah, unequivocally, there's going to be an impact to Bitcoin. Now, again, this is volatility. More of the impact to Bitcoin, though, at this point in time, is overall volatility inside of U.S. equity and index markets. I would be much more, concerned with, for instance, where the S&Ps are, other than what we're looking at right now inside of this carry trade around stablecoins. Again, what's more disconcerting is overall volatility of the marketplace, which is really causing, if you will, a degree of panic inside of the retail side of the business, not so much the institutional side of the business. Very few people are familiar, if you will, with how they actually stabilize some of the coins here. But in this particular case, there's no question that there's going to be carryover. Listen, everything at this point in time is an algorithm. Everything at this point in time is completely tied together. It's often what we call the curse of dimensionality. And that is, I don't care whether you're looking at Bitcoin, whether you're looking at gold, whether you're looking at the US dollar, whether you're looking at the NASDAQ, futures. We are trading in a marketplace right now that has unprecedented volatility. And if you haven't necessarily been in this type of volatility before, you're going to gain the utmost respect for it in the very near term. This is a marketplace, as I said. There's some good, some bad. We haven't seen outright capitulation. We're going to be making some very critical decisions, though, in the near term. If and around Bitcoin hitting the 30,000 mark, we'll see if volatility absolutely explodes in that marketplace, which would be a sign of capitulation. As I also stated a little bit earlier, one of the things that I've actually tracked extensively on the retail side is those effectively that trade, products like Bitcoin, also trading some of the meme stocks. One of the things that's very disconcerting is when you start looking at price action and, some of the stocks like GME, which is of course GameStop from 2 years ago. And that stock is coming off, but we're still talking about effectively a $100 product. I mean, there is a long way to the downside in here. And I think until we see some of the great unwind of those, that whole meme error, I think we have to be concerned also about Bitcoin and any of the crypto assets.
All right, Don, we got to wrap it there, but thank you so much for joining me and offering your insights. That was TheoTrade co-founder Don Kaufman. Coming up, we'll check in with the Bitcoin community on Bitcoin Improvement Proposal 119. The pros, the cons, we'll have more with Adam Back. Welcome back. Bitcoin Improvement Proposal 119 continues to stir debate in the Bitcoin community. Developer Jeremy Rubin proposed the soft fork to enable covenants on Bitcoin, which would allow BTC transactions to specify limitations or restrictions on transactions. Adding fire to this proposal, Rubin is requesting speedy trial, that is, requesting miners to signal their support or not of the proposal to expedite its implementation. Joining us now to discuss is Adam Back, renowned cryptographer, inventor of Hashcash, and CEO of Bitcoin-focused tech firm Blockstream. Hi, Adam. Thanks for joining us.
Hi, thanks for having me on.
So there's two debates here, really. First, whether BIP 119 is needed, and second, how it should be implemented. Where do you stand on the first point? And perhaps you could help folks, in terms of just walking us through what it is.
Yeah, I think there are basically 3 or 4 different topics that kind of got confused because there are very technical parts and then more, use case parts. And so backing up, the top level discussion is a kind of covenant type of opcode for Bitcoin. So Bitcoin's programming language is based on opcodes. It has dozens and dozens of opcodes, and a covenant is a particular type of opcode that was first proposed in 2013. And at this point, there are maybe 4 or 5 different proposals. 119 is one of them. CSFS, TLUV, and there are a few more. So alongside with CTV. So, one of the discussions is, are covenants desirable for Bitcoin? And I think at this point, for the last few years, people have been mulling it over, considering the risks and trade-offs and thinking, let's see some more R&D on that. And then
maybe you
CTV
can go through some of what are the benefits and what are the pros, and then what are the cons? How can it go wrong?
Right. So the benefit is it's a bit more flexible opcode that enables some new types of scripts. One of the primary use cases is a thing called a vault. So kind of like a time lock vault with a bank, that you would have a time period where you could start taking some Bitcoins out of a vault. This is for people who do long-term storage. And you'd be able to cancel a transaction, let's say for a period of a week or something like that. And then finally it would become available to you. So that's one of the types of use case that this type of programming would allow. And there are a few different variants. Broadly, there are recursive and non-recursive. Back in 2013, there were considered to be some risks with recursive. I think these days people have become more relaxed about those risks. They are kind of opt-in. They don't affect you unless you use them. So there's a bit of discussion about whether Bitcoin should go, explore going directly to recursive or stick with the simplified. And CTV is an example of a simplified one. TX hash is another simplified one. And there are recursive variants under discussion as well.
And where do you stand?
I'm pretty easygoing in terms of whatever the technical community arrives at consensus on. So the technical consensus discussion is all the technical people who have experience with that kind of tech get together and compare trade-offs between different variants, hopefully eventually arrive at a conclusion about which way of doing it is better or best to do first. And there are lots of trade-offs to discuss. And at that point, there would normally be a discussion about activation afterwards.
Well, from what I understand, these covenants would almost give Bitcoin some smart contract capability, but it could also go wrong in the sense that if a government actor were to enter the picture, they could prescribe some regulatory authority over Bitcoin, which is not what the Bitcoin community wants. So it could go wrong in that sense. Is that the case?
That was one of the original concerns back in 2013, but I think that effectively there are simpler ways to do that, which already exist, in fact, and are used for share-like transactions. So things where there are transfer restrictions to do with which country the resident lives in, things like that. And so, I think from that point of view, it doesn't really introduce new risks. So people got more relaxed to that, but they are quite complex new features, particularly the recursive version. So it's certainly something you'd want to see a lot of, design thinking and security review about the implications and the way it interacts with the other parts of the Bitcoin script system.
So that's what I hear very often. There should be more review, there should be more design thinking. And I guess that brings us to the second part of the debate, which is Jeremy Rubin has suggested that this proposal be implemented via speedy trial, which would have all miners signal whether or not they support it or not. And in your view, I believe you believe that it is just too quick, correct?
I think the usual process, kind of jumping the gun, if you like, so the usual process is that, and this has happened, many times in the past with Bitcoin upgrades over the years, there would be technical consensus and community consensus, the ecosystem, the companies, the wallets, and so forth, and the users, the investors, that they want this feature, that they agree this is a good way to do it, and then they discuss activating it. So I think there was a bit of confusion early on that CTV kind of proposed to activate pretty immediately and find out if miners like it, which kind of misses the point. And that seems to have been retracted, which I think is the right thing. So now there are multiple different ways to activate things. Previously, BIP9 has been used. Speedy trial was used for Taproot, and something else entirely was used with SegWit eventually. And so, I think it's just very premature. So I expect we'll see a lot more discussion about the trade-offs and see how that progresses.
Do you have a sense of whether miners have signaled their support for it and what the consensus is in the community?
I think at the abstract level, at least the developers are quite interested to see covenants further developed, potentially eventually get adopted. I think it's very premature, so the miners don't really play a strong part in figuring that out, whether the ecosystem wants it. I think that's one of the things the market learned from the kind of block size drama back in 2015, which is that miners are just kind of service providers that act on what the market wants.
Well then, Adam, what would you say to young developers like Jeremy Rubin who just really want to get this done and really want to see it upgrade to Bitcoin and are trying to push this proposals like this through? What would you say to those young, ambitious developers?
Sure. There have been a lot of new people contributing to Bitcoin. Each release has typically got 100 to 200 contributors. Many of them new who weren't participating a few years ago. So that's great. And I think there are general upgrades to Bitcoin, and there are ones that touch the consensus rules. So the consensus rules tend to be higher risk, higher review, and Bitcoin uses something called the technical consensus process. So it's a bit like the IETF process. A side effect of it is that it tends to be a little slow because you're essentially looking for approximately everybody to agree, or at least agree that any of the technical concerns raised are addressed. And so, I think you just have to go through that process, basically involve more people. The first step towards consensus to get one other person to agree this is a good idea, and then, build from there, have trade-off discussions. I think a good way to build consensus is to discuss the trade-offs between different versions.
I guess that's the consequence of being truly decentralized. Just one quick question before we end off, Adam. But the big story of the day is UST, an algorithmic stablecoin from the Terra Luna community, has lost its peg. The UST has now gone down to 92 cents, now at 94 cents. They have huge Bitcoin reserves, the second largest corporate holder of Bitcoin. And I wonder, what do you think is the consequence of this to Bitcoin potentially, if any?
Yeah, well, I'm glad you asked that question, because I was kind of disagreeing with what the previous presenter was talking about. Previous speaker was talking about. So basically, it's specific to this stablecoin because it's fractional in two ways. So one is it's partly backed by these Luna tokens that they've just printed, as part of a kind of ICO-like process. So their value is, anywhere from what the market will pay and zero. And more recently, they've added Bitcoin collateral, and they had some dollars originally that they, bought Bitcoin with as well. And so, it was observed that the whole thing was fractional. It's kind of like a fractional reserve central bank. And so people have been warning that this peg could come undone if it's fractional. Everybody can see where the liquidations level are. And, selling into the market will push down the collateral, particularly the Luna token, which has, a very narrow pool of buyers and value only associated with this stablecoin, right? Bitcoin, yeah, I guess it can absorb it. It absorbed a lot of buy-in to get to where it was. They bought, I guess, 1.5 billion or something like that. So
about 2.6 billion.
That. Okay, yeah, over time, right? So it's if they sell it all at once, that won't be pretty. So we'll see how that develops.
All right, Adam, thank you for joining us. Appreciate your time. That was Blockstream CEO Adam Back. That's it for All About Bitcoin. I'm your host, Christine Lee, and we'll do it all over again tomorrow at 3 o'clock in New York. Also join us tomorrow morning at 9 a.m. Eastern for First Mover. You're watching CoinDesk TV.